Hello, my name is William Kumwembe and welcome to this week's edition of the program Business Time. This is a magazine program in which we bring you major business and economic news stories making headlines in the country. And in the program today, we look at the rationality of a proposal by the Electricity Supply Corporation of Malawi, Escom, to effect a 69.7% increase in tariffs for electricity within the next 4 years. And also in the program, we look at performance of the tobacco market this far. How has the market fared? And we have these and other stories. Stay tuned. Hello and welcome. This is Business Time. In our main story in the program, some months ago, the Electricity Supply Corporation of Malawi, Escom, proposed a 69.7% increase in its tariff within the next 4 years. But on Monday, the Malawi Energy Regulatory Authority, MERA, started hearing from consumers and other stakeholders on their view in as far as the suggestion by Escom is concerned. The consumers and the stakeholders took turns to denounced the proposal, saying it is not as practical, considering that for quite some time the utility body has not been providing the required service, and as if that is not enough, it is still faced with a number of challenges that are emanating from what they call poor management in some sections. Our journalist Kumwembe attended the first review meeting from where he filed this report.
Consumers Association of Malawi Executive Director John Capito says a review of the just-ended base tariff 2018 to 2022 has shown that Escom failed in almost all its agreed key performance indicators. He says in the past 5 years, consumers experienced the worst delivery of electricity through prolonged blackouts, system failures, poor customer care and continuous corruption incidents, among other things.
What we are talking about regarding this application by Escom of 69.7% spread over 4 years is also coming at a time when we are coming back from another base tariff where they did not perform. So the arguments that we are putting forward is, what is it that they are demanding for when they failed to perform in the past? So we were looking for a balance where they can assure us that whatever they are trying to promise now are issues, are things that they are able to achieve. Now, when you read the document that they have presented to MERA, you will find that I think they are really playing around with the minds of consumers. They are not going to achieve anything in there. Now, what we are saying is either we maintain with whatever they had before, with no tariff increase, because it doesn't make sense. Or either they can resubmit the application again to indicate all the key performance indicators and explain how they are going to achieve them.
But Escom Chief Operations Officer Maxwell Mulimakwenda says the application is made in line with its role as a single buyer.
Indeed, it's true that as Escom, we've proposed to the regulator MERA 69.7% tariff adjustment. Escom, in our role as a single buyer, we make these applications of the whole electricity. So we combine costs for generators like Genco, independent power producers, we look at the MERA levies, market levy, and we also look at Escom costs. So putting together all of that for the next 4 years, that's why we propose 69.7%.
But the government is protesting that, is saying that is exorbitant, at least for 6% is okay. What's your take as Escom?
So our role as Escom is to prepare a tariff proposal to the regulator. These public hearings are important because we need to listen to the voices of our consumers and stakeholders. The regulator, of course, is going to make the final decision. But what I would like to clarify is that we have not had a tariff adjustment since March 2021, although significant economic changes have happened to this country. There has been devaluation of the kwacha, there have been inflation increase, and many industries have increased prices. But But as Escom, nothing has happened as now. We understand that the economic situation is not favorable to everyone. That's why we've worked hard with the regulator to look at affordability issues. So even as I explained, we have foregone several areas where we could earn revenue, but we have agreed with the regulator to say no, for the sake of affordability and our customers out there, let us be reasonable. So this 69.7% increase, in our view, is a very reasonable.
MERA Chief Executive Officer Henry Kachaje says a determination on the application will be made once a review of all the input from stakeholders has been done.
Now, it has been 13 weeks since the opening of the 2023 tobacco selling season. At the end of the 13th week, the country had already realized about $255.4 million from sales of all types of tobacco. Now, this comes as the third and last crop estimate indicate that the country would have produced about 110 million kilograms of all types of tobacco, which is about 12.7% lower than the area estimate of 126 million kilograms. And of course, this is also lower than the 170 million kilograms that is in as far as the market demand is concerned. Now, we are looking at how the market has fared this far and what are the prospects for the next growing season. Our journalist, Kumwembe, has the whole story.
As the tobacco market comes to an end, the feeling in the air is that of excitement, where a lot of farmers have earned most from their labor this year because of the high prices that we're seeing, and indeed the earnings in total that have been gained. From the figures that we have seen from the Tobacco Commission and indeed the market operator AHL Leaf Limited, they indicate that so far the country has realized in excess of $254 million. That's higher when compared to the $170 million that the country earned after the sale of all types of tobacco last year. And indeed, the volumes have also increased because this year the amount of tobacco that has been sold on the market is somewhere about 108 million kilograms. And last year, the total amount of tobacco that was sold was 85 million kilograms. So there was an increase in production this year. And what we are seeing, we are at the Limbi auction floors. There is no sale today, but there will be sales in coming days. And this testifies that most of the tobacco that has been produced this year has already reached the market and being sold. We are told that according to the third round crop estimates, 110 million kilograms of tobacco is what the country was able to produce this year. And thus far, as I earlier indicated, we have sold about 108 million kilograms. So we are told that from this weekend, from this coming Friday, the markets will start close, beginning with Chinkoma Market, which closes this coming Friday. And on the 21st of July, Limbi auction floors, where we are standing, and indeed Lilongwe floors will close, and the last to be closed will be Nzuzu Market, which closes on the 4th of August. We would like to understand how the Tobacco Commission has taken all of the trading developments on the market this year. And for that, we spoke to the spokesperson for the Tobacco Commission, Mr. Teleforas Chigwenembe.
As Tobacco Commission, we are happy with what has been happening so far. From the time that the selling season started up to this week, we have seen good prices being offered to our farmers. We have seen that the rejection rate has been very low. When you look at a couple of years that we've sold tobacco, you see that this year the rejection rate was really impressive, because we're talking of about 1%, which is really good. And it's an indication that the presentation of the tobacco was good this year. We have also seen that if there were any issues, such issues were resolved amicably. That is why we did not see market disruptions this year, as has been the case in previous years. So this has been a very good season, and we believe that this is how things will be up to the end in a few weeks' time. Right now, we see that most of the tobacco that was produced this year has been sold or has been brought to the floors. So we are coming to the close of the season. For this reason, this week, Friday, we'll be closing Chinkoma floors. And next week, Friday, we'll be closing Limbe and Lilongwe floors. And the Mzuzu floors will be closed on 4th August. And that will mark the end of this year's tobacco selling season. You see, it's been exciting. It has been an exciting season, mainly because of the prices. And we are confident that this will also motivate farmers to produce more in the next farming season. We also believe that apart from existing farmers, we will have new farmers, more new farmers, so that they too benefit from tobacco farming. It is we're going to continue encouraging farmers to produce more because we need, as a country, we need to produce more. This year we're supposed to produce 170 million kilograms, but obviously we're not getting there, which means that there is room. If farmers produce more, there is already a market for our tobacco. And just to remind farmers that recently, when the state president visited China, there was good news that came from there, that Chinese buyers have been allowed to buy our tobacco, starting with 10 to 20 million kilograms a year. So there is already a big market for our tobacco. That is why we are looking forward to increased production in the coming farming season.
As indicated, developments on the market this year is raising expectations that there is going to be an increase in production of tobacco come next year. This is because of the higher prices, as I already mentioned, and indeed the fact that the industry was not able to produce as high as was demanded on the market, because the market demand was at 170 million kilograms of all types of tobacco, but the country was only able to produce somewhere around 110 million kilograms of tobacco. So the authorities and indeed the stakeholders in the tobacco industry will be trying to meet the demand for next year. It is not yet known, but we expect that it should be along the lines of this year's demand, and indeed it may be more. So the expectation is that a lot of farmers are going to go back to tobacco production, and that the country may produce more tobacco as has been produced this year, and indeed earn a lot from the crop.
Moving on with the program. In June, the Malawi Stock Exchange maintained with its positive performance. For the past 6 months, the market has remained buoyant. Of course, we have noted a number of movements in as far as share prices are concerned. Our journalist, Justin Kweo, has been following the trends on the local bourse and has since filed this report.
Malawi Stock Exchange has 16 counters. In the 16 counters, the banking sector dominates. But apart from the banking sector, there are other sectors, such as hospitality, where the stock market has Blanta Hotels Limited and Sunbelt Hotels and Resorts. Apart from that, there is also manufacturing, where the market has Ilovo Sugar. The market also has the telecommunications, where it has the two telecommunications giants in the country, TNM PLC and Airtel PLC. But aside from that, there are also real estate companies, and one of them is Mpiko. The market has seen a positive performance in June this year, registering a Malawi All-Share Index growth of 108,656.97 points during the month under review, from 102,837.75 points during the preceding month of May. This is according to a monthly economic report from a financial advisory and asset management firm, Bridgepath Capital. The report indicates that the growth represents 5.6% increase month on month, whereas the year-to-date return on the mass is 75.15%, and it was 9.32% during the same period in the previous year. It says that in June, which is last month, Icon Properties was the largest share price gainer, as its share price increased by 68.65% to 18 kwacha 99 tambala per share from 11 kwacha 26 tambala per share in May 2023. Other counters with share price gains were NBS, FMB Capital Holdings, NITL, TNM, National Bank of Malawi, and Standard Bank. And there were also marginal share price gains for Blantyre Hotels Limited, Sunbelt Hotels and Resorts, and Airtel Malawi PLC. The report adds that in June 2023, Old Mutual was the largest share price loser, as its share price decreased by 14.86% to 960 kwacha per share from 1,127 kwacha 51 tambara per share in May 2023. It adds that there was also marginal share price losses for PCL, that's Press Corporation, for Ilovo, FDH Bank, and Nico. Commenting on the development, Malawi Stock Exchange Chief Operating Officer Kelin Kondowe said going into the second half of 2023, the outlook remains positive, especially looking at the trading statements that have been published so far. She added that they are aware that there are a number of downside risks within the macroeconomic environment, but so far the market has shown to be resilient. Minority Shareholders Association of Listed Companies General Secretary Frank Harawa said so far the year has been good as investors have made good returns. He said that they are happy as investors with the performance of the market, and with trading statements coming out, they expect positive performance. Malawi Stock Exchange having 16 counters, people are at liberty each and every day to invest where they want.
Now moving on to other business news, Malawi continues to grapple with scarcity of forex, mainly due to the country's insatiable appetite for imports vis-a-vis its inability to produce enough for the export market. But for quite some time, Malawi has been making inroads in as far as being part of so many pacts within the region and across is concerned. And the question that has always been there is that how have these pacts helped Malawi to advance its drive towards import substitution? We have the whole story in this report.
Malawi's import cover has improved from around $196 million, which was slightly around 0.78 months in May, to around $538 million, which is now around 1.7 of import cover. All of it combined, private sector and government, it hovers around $700 million, which is around 2 point something, close to 3 months, of course, of import cover. This must probably be some kind of a good news, considering where the country is coming from, where the country is struggling with foreign exchange scarcity. During the last year and this year as well, we have seen how the country has struggled with scarcity of fuel, for example, and fears of scarcity of pharmaceuticals, for example, and other necessities that Malawi needs for its operations as a country and, of course, for the citizens. With the improvement in import cover, what does it mean? What might be the reason for that? This is the reason I engaged economist and economics lecturer at the Malawi University of Business and Applied Sciences, MUBAS, Dr. Bechani Cheren. Firstly, as I have indicated that we have seen an improvement in terms of the import cover. Maybe what might be the reason for this?
Look, it's a very obvious thing. We are in a period where Malawi, being agrarian, if at all we are going to export anything, this is the period when we export, the mainstay being tobacco, we export some soya and many other things which are pretty much agri-based. So if you look at it critically, you find that it's mainly because of the exports of tobacco. This year, we have had more kgs, more quantity of tobacco produced. It may not be where we wanted to be, but it's better than last year. And number two, it's about the pricing. You may have noted that most of the tobacco has been selling at about $2 per kg. Some of it had to reach about $3 per kg. So good quantity plus good price, that should give you good quantity of foreign exchange as well. In other words, we have managed to export something. So that's why we are hovering somewhere there where I think the numbers are a bit okay, but they are not as satisfying. You may also want to know that that's official reserves, right? So the official reserves, when the number is getting better, you should be happier, because mostly in Malawi we do have foreign exchange, but in the in the hands of people unofficially. On the parallel market they do have some foreign exchange there.
Now you talked about the tobacco market as the main contributor, if I got you right, and now we have seen that the Tobacco Commission has announced that the markets will be closing shortly, starting from this month. This month, of course. How sustainable then is this good news that Malawi would smile at, considering that the tobacco market is short-lived?
Look, sustainability is a different story if you are going to bring in also the aspect of whether this is enough. It is not enough. Remember that we require to have at least 3 months of import cover out a particular period of time, because when we have the 3 months, actually you can smile. You know that we can buy the fuel, we can buy the medicines for the hospitals, we can buy some of the most strategic commodities. But when you are below, it is dangerous. In fact, although we are smiling now, it is not beyond the 3 months. So we may not have to celebrate much, because when the tobacco season closes, and then also that the other imports which are minor in nature or exports which are minor in nature are not bringing much of that foreign exchange which we need, then that is going to be even a much bigger problem. So its sustainability is questionable, because after this period, then what else are we exporting? It may not be there. Of course, we know that there's a lot of export that happens, but clandestinely, people are busy, exporting some of the mining products, but they don't find their way into the mainstream or the official stream.
Well, that report also brings us to the end of today's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumwembe, but always remember, if it doesn't make money, it doesn't make sense. Stay safe and bye for now.